Hello everyone. Yesterday, after our market close, Indian government released the March month consumer inflation data. So in this video, let's discuss about it first. Then followed by we'll discuss our regular pre-market report for today, 16th April 2025 for the Indian stock market in terms of Nifty and Bank Nifty. March month consumer inflation data came as 4-year low, just 3.34%, which is lower than the RBI's target 4% for the second month in a row. And it was even lower than the analyst estimation 3.6%. This is completely unexpected, and this now raises two questions. Whether this low inflation is because of slowing economy or because of increasing supply. If it's due to increasing supply, then it's good. But if it's due to slowing economy, then it's not good for stock market as well as economy. To understand in detail, let's look into the sub-breakup category. This is very interesting table for the past 12 months. If required, please pause and have a look. Here, the stock market related things, housing, health, transport and communication were fairly stable between 3 to 4%. And this unexpected low inflation mainly comes from the food inflation, in that particularly vegetable prices. If you look between April 2024 to December 2024 in comparison to the respective 2023 period, almost all the months the vegetable price increased roughly 30%. But from January 2025 onwards, it started to reduce drastically. In Jan 2025, it was 11%. Then on February 2025, it had a mild deflation, negative 1.1%. And then now March 2025, it had further severe deflation, negative 7.7%. Here, food is the essential thing. It has nothing to do with slowing economy. Even so, it should be the last one to get affected. In this way, we can understand because of severe price hike of vegetable in the last year 2024, like 30%, now it is having some deflation, nothing else. This macro data haven't indicated any slowing economy. In addition, yesterday our meteorological department released a statement that this year 2024 they are expecting India to have above normal monsoon. Hence, there is less risk of food inflation increase again this year, which is paying more room for RBI to cut the interest rate further. So we can take this inflation number as very positive and market friendly. In fact, when this macro was released, GIFT Nifty increased to near 23,450, but the last night US market negative close, which we'll discuss in a moment, made it to drop. Early morning today, it traded at 23,314, equating that with the spot market. For now, it's indicating the gap down opening of 50 to 70 points. Then coming to US market, just a bit of recap. During weekend, Trump paused the tariff on all imported electronic goods to US, which over 50% of them was coming from China. So Monday night US market rallied. As a consequence, even our Indian market also increased yesterday, which I think most of the viewers know this now. Hence, basically, Trump blinked first. But still the standoff is continuing. Trump said he's open for trade deal with China, but he want first Chinese president to call and make a deal with US, rather US to make deal with China. Again, will Chinese president come down to make US trade deal? Only time has to say. So far, as I understood from the Chinese government official release, they want US to remove all the tariff and their official to finalize the deal first. Then the Chinese president planning to come for agreement signing, since they don't want Ukrainian president episode for Chinese president. Again, my point is the standoff is still continuing. On top of that, Trump administration started the investigation to impose tariffs on pharma and semiconductors, like what will be the impact, etc. All these uncertainty made the US market to close slightly negative. Dow Jones was down by 0.38%, S&P 500 decreased 0.17%, and Nasdaq closed near flat with some negative bias. In case of VIX, it dropped 2.5%, but still it's above 30. So still high volatility and high fear in the US market. Then about oil, it also kind of waiting for next Trump action, didn't move much compared to Monday night. At the time of this video, WTI crude trading at $61.5 per barrel and Brent crude trading at $65 per barrel. Regarding Indian ADR, because of the very low India's consumer inflation and the expectation of more interest rate cut, both the banks increased. ICICI Bank ADR increased to 2% and HDFC Bank ADR increased 3%. Even if we calculate the arbitrage, then also those positive arbitrage still holds. However, if we see the IT stocks, it was very confusing. Infosys ADR close to flat and Wipro ADR was down 1%. But both stocks got significant positive arbitrage. Don't know why Infosys got 3.5% and Wipro got near 5%. It seems like for some reason both the stocks developing the dollar premium equivalent of HDFC Bank, which is very much unusual, haven't happened in the last 2.5 years. So I think considering this new dollar premium, IT stocks signaling flat with positive bias. In short, banks clearly looking good, IT stocks confusing. In addition, in a surprising move, Dr. Reddy's ADR, which is a pharma company, also closed to positive despite Trump tariff threat. Anyway, about institution in the cash market, after 9 trading sessions and for the first time in April month, FII turned as mega net buyers. The net bought for massive 6,000 crore rupees. On the other hand, DA net sold around 2,000 crore rupees. Moving to derivative market open interest analysis. First, in the index option, yesterday proprietary traders bought lot of call options. Hence, at present, they turned their net neutral position on Friday closing to net 1.9% open interest on the bullish side. FII also reduced their net 1.7% open interest bearish position to net 0.7% bearish position. On the other hand, retail traders from net 3.1% open interest on the bullish side now turn to neutral. In addition to this, in the index future market, FII holding 72% of their open interest on the short position. Similarly, proprietary traders holding 66% of their open interest on the short side. Whereas on the long side, DAA and retail traders holding 79% and 57% respectively. Overall, combining both the market, all three participants, retail traders, FII and proprietary traders, all wants the market to close neutral. Just on the options market, proprietary traders makes comparatively more money if market goes up. But as we discussed multiple times, net 1.9% is nothing. Stance can be changed in one single session. As a summary, US market closed flat to negative, and in line with that, our GIFT Nifty is indicating the gap down opening of 50 points. But we got very good consumer inflation macro, which already showing its impact on banking area. So possibly that might help the market. Then, as per stock open interest, only 4 stocks, PNB Housing, Glenmark, Max Health and ITC got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, IREDA, Hindustan Zinc, Maruti, Infosys and ICICI Prudential Life Insurance are some of the stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, Wipro, Angel One, Reliance Infra and Swaraj Engines are some of the companies' earnings results are going to release today. Then about macro, early morning before our market opening, lot of Chinese macro such as GDP, retail sales data and industrial production are due to release. Then during the market hours at 11:30 am, UK consumer inflation and in the afternoon 2:30 pm, Europe consumer inflation is scheduled to release. Finally, in the night for US, their retail sales data, crude oil inventories, 20-year bond auction and Fed chairman speech are some of the things we need to keep an eye out today. Coming to technical, Nifty opened more than 500 points gap up at near 23,370, which also was its intraday high. Then throughout the day, it was steady and closed at around 23,330. Thus, on the daily chart, Nifty formed a hanging man pattern indicating a possible pause in the current rally. On the other hand, it closed above the 100-day exponential moving average. RSI momentum indicator has positive crossover, all indicating possible more steam left. Hence, the support is at 23,200. A decisive break below this level could trigger a correction towards 23,000, whereas the resistance is at 23,400 to 23,500 zone. In case of Bank Nifty, similar to Nifty, it also opened 1,300 points gap up and closed at 52,380. Thus, on the daily chart, Bank Nifty formed a small bullish candle with long lower shadow, which is positive. In addition, it moved closer to upper line of the Bollinger Band with RSI and MACD momentum indicators showing positive crossover. Hence, all indicating a potential more uptrend. As per the weekly options data, the maximum call option operators was at 24,000 strike, followed by 23,500 and 23,300, with maximum new call option rating at 23,300 strike, and then 23,400 and 23,350. On the put side, the maximum operators was at 23,300 strike, followed by 23,000 and 22,500, with maximum new put option rating at 23,300 and 23,000 strikes. Thus, from options data, 23,500 and 24,000 are the next hurdles, and on the downside, 23,300 is the immediate support, followed by 23,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.